Think about this. Consumer prices are hitting record highs. Rent is unaffordable. The average citizen is struggling to buy groceries. By all logic, the economy is bleeding. But then you look at Wall Street and the stock market is hitting all-time highs. It makes absolutely no sense, right? If the economy is crashing, why are stocks skyrocketing? Well, it's not a glitch. It's a calculated hidden mechanism that the top 1% use to get richer while the middle class gets wiped out. Today, we are exposing the big secret they don't want you to know. To understand this mystery, we first need to break down what inflation actually is. Most people think inflation just means things get more expensive, but the elite look at it differently. Inflation means the value of the cash in your pocket is dying. When the central bank prints trillions of dollars, currency loses its purchasing power. If you hold cash in a bank account, you lose. So, where does that massive wave of money go? It doesn't just vanish, it floods straight into scarce, productive assets. And what is the easiest productive asset to buy? Stocks. Think of the stock market as a giant sponge. So when the government floods the economy with cheap cash, the sponge absorbs it, pushing stock prices up. It's not that the companies suddenly became twice as valuable, it's just that the currency used to buy them became twice as weak. It is a massive asset illusion. But wait, there's a deeper secret. Why do companies survive during high inflation? It's a concept Warren Buffett calls pricing power. When the cost of raw materials goes up, bad companies collapse. But giant corporations, the ones that dominate the S&P 500, simply pass those higher costs on to you, the consumer. If Chipotle's ingredients cost 10% more, they raise burrito prices by 12%. If Apple's microchips get more expensive, the new iPhone costs an extra $100. As a result, these massive companies actually report higher revenues and record-breaking nominal profits during inflation. And since stock prices are driven by corporate earnings, the stock market climbs higher. The rich own the corporations that collect the inflated dollars, while the average consumer pays the bill. Here is the third secret the 1% utilize. Inflation destroys debt. America's biggest corporations and the US government itself are drowning in trillions of dollars of debt. But look at how the math works. If inflation is at 7%, the real value of that debt shrinks by 7% every single year. Big corporations borrow millions of dollars at fixed low interest rates, buy back their own stock, and let inflation burn away the real value of what they owe. It's a massive transfer of wealth. Debtors who own assets win big. Savers who hold cash lose everything. This is why global billionaires aren't sitting on billions of dollars in cash. Cash is a melting ice cube. Instead, they treat the stock market as a hedge against currency devaluation. When you buy a share of a top company, you aren't just betting on a stock. You are buying a piece of real estate, machinery, patents, and global human labor. These real-world things hold intrinsic value, no matter how much money the government prints. The stock market isn't rising because the economy is healthy. It's rising because it's the only escape boat left in an ocean of depreciating fiat currency. The big secret is simple. The stock market and the real economy are completely disconnected. The market tracks asset inflation, while the economy tracks the struggles of everyday people. If you want to survive this hidden tax, you have to stop thinking like a consumer and start thinking like an owner. Move your capital into assets that inflation cannot destroy. If you found this breakdown valuable, hit the like button, subscribe to Smart Money Hub, and drop a comment below. Are you buying stocks right now or holding cash? See you in the next video.